Everyone. So once again, the Axelar and the Keyrock teams welcome you. Thank you for joining us. And we're, again, very grateful for you all to be here. My name is Robert Valdes-Rodriguez. I am the Chief Commercial Officer at Keyrock. Keyrock is a global algorithmic market making and trading firm. On one side, we are the dedicated market maker for many of the large foundations in the industry, as well as on the OTC side, many of large hedge funds, both crypto native, TradFi, OTC desks, and so on. So trading is what we do. Over the last 6 months, we at Keyrock have been having dozens of conversations relating to RWA. And it could be whether it's tokenized money markets and these TradFi firms and crypto native firms coming to us about liquidity provisioning across all types of different RWA. So we're going to talk about that right now, right? And with us today, we have Armand from Ondo and Tim from Mantle. They're not only leaders in the space, but they're in the thick of it at the center of all RWA activities. So I'm going to hand it over to Armand and Tim, each of you, just to introduce yourselves, and then we'll get right into it.
Hey everybody, nice seeing y'all. Armand, Khatri from Ondo, leading ecosystem efforts over at Ondo. Before joining Ondo about 6 months ago, led a lot of the ecosystem efforts for Base, and before that spent about a decade in Web2.
Hey everyone, Tim, I lead global strategy at Mantle. So look, our goal is to bring crypto to everyday life. Our two metrics I like to throw out are how do we onboard the next billion users, how do we onboard the next $1 trillion of capital into crypto.
Great, great. Thanks to you guys for joining. It's going to be exciting 30 minutes. So if each of you can give your own perspective on why you think the RWA narrative is really starting to pick up so much steam. You guys each have different perspectives and love to hear each one of them.
Sure. Well, where do we start? Stablecoins obviously have proven some semblance of product market fit on chain, and I think when stablecoins take off to the point of 150 billion locked into them, it gives everybody this sort of aha moment that okay, well, an on-chain checking account works really well. Maybe an on-chain savings account works really well. What would it look like if these stablecoins actually produce yield? We're in the business of making yield coins, and we've seen significant flows into them, as have BlackRock's Biddle and Franklin Templeton's Benji, et cetera. So I think that stablecoins have sort of led to the sort of like maybe the gateway moment of people exploring other RWAs. And with that comes a lot of like memetics that are in this industry of, oh, wow, that RWA is doing really well. So maybe I'll also launch an RWA because it is a hot narrative and I could capture that attention and then maybe I could TGE as well. So I think there are some memetics at play, but generally speaking, it's a lot of institutions are seeing a sort of like sell-side asset issuance opportunity to enter a space, maybe increase their TAM. And that's, I think, leading to cascading inflows that we're all witnessing now.
Yeah, you're absolutely correct. So piggybacking off of that, I was a VC in a last life and did a lot of deals in emerging markets. We invested in companies like Nubank and LATAM, so very familiar with the value prop of a stablecoin in Latin America, especially places like Argentina. Now, to your point, I would stack it as like, okay, stablecoins, especially dollarized ones, is a table stakes for a savings account for non-Americans or non-US peoples. Great. Then it's T-bills. Why don't you get risk-free yield on those stablecoins? Cool. That only worked because President Powell jacked rates to 5%. So then all these TradFi guys are hungry and looking around and say, okay, what else can we throw on chain and get these crypto guys to invest in? How do we increase the, instead of having like barriers to entry of like QIAs to subscribe to our fund, why don't we throw it on chain and lower that minimum to $100 and get a bunch of new capital on chain? I think that's been the impetus of it. And then on the other side, you have a bunch of VCs who were overcapitalized from last cycle, trying to force a narrative saying, okay, what should we do? Oh, look, number go up on this one chain for the RWA. Let's force that narrative and keep it riding. So it's a confluence of two things. But what is interesting is like, okay, what comes after that? Is there actual real product market fit beyond T-bills on chain? And what does that look like?
So I totally agree with the stablecoins as kind of the gateway. But let's dig a little bit deeper, and to your point, not to put you guys a little on the spot, but I will. We talked about some things that work, stablecoins, right? What is really sticking out there with this new development, with RWAs, with tokenization? What's sticking? And then, and I'll let you start with what's sticking, and then Tim, I'll go to you with what's not sticking, and what's like really not working, and what's out there. Everybody's talking about it, but really kind of not working, and the reason why.
Yeah, I mean, like, if stablecoins are 150 billion on chain right now, and tokenized T-bills are, a couple of billion, I think we're seeing semblances of them finding product market fit. There's still a lot of education that needs to happen, and you're also dealing with like an on-chain native community that's predominantly interacting there. And I don't know if 4.5% is enough to attract a lot of on-chain liquidity to these products, right? But on the tokenized T-bill side, I do think there's now this opportunity, if we could essentially bring like SOFR on chain, to create a new hurdle rate for investments. And as we're starting to explore the interplay, as we are at Ondo, of USDY within DeFi protocols, I think it's very interesting to see the impacts that could have on, let's say, like a lend borrow or other primitives that have been ripe for shaking up for a while. Now, in terms of where does that lead, I think to Tim's point, like, yes, you start with a stablecoin because you want to diversify your currency into perhaps US dollars. Then you go to, oh, actually, I could earn yield on this? I'll take that version. You could earn yield on it, and then you realize, in order to keep up with inflation in the US economy, I probably have to be in the S&P 500, not necessarily T-bills. So I think that's next, and that's also what we're building towards at Ondo.
Great, thanks. And agreed. Tim, before you go into what you think is not sticking, and just from your perspective, you're seeing something else down the road that either is starting to get some traction and sticking, or what may not be, but you're seeing really something take off.
Yeah, so we take the opposite side of that coin, which is, if you look online, what is on-chain, there's like $400 billion in stable coins, $100 billion locked up in DeFi. And then you look in the TradFi world, there's $100 billion in Bitcoin ETFs alone. And on the DeFi, on stablecoins, that ratio is like pretty saturated. On TradFi world, that's like a tip of the spears. We still haven't even started selling Bitcoin to boomers in Indiana on the golf course, right? So we're building in that direction. I mean, there was a project announced on Mantle that is an index fund of your majors packaged in a TradFi wrapper, selling to TradFi folks, right? So instead of trying to find a product market fit on chain, we're taking innovative products on chain and putting them towards TradFi folks. And answer a second question, what is not working? I'm very curious. I'm rooting for you guys. I'm really curious to see what tokenized equities looks like. I think there's a lot of regulatory challenges, but I think the most curious thing is like, what are people going to be trading? Like realistically, you don't need all the S&P 500. Probably the Mag 7 is probably going to get the most interest. But if you believe the Mag 7 gets the most interest, who's actually trading that? It's probably folks that are long-tailed that don't already have access to trading this in their local brokerage account in some XYZ developing country. So I don't know. Like I don't know if there's enough organic net new capital coming in to trade these things. But if there's real-time settlement, these things, on the at price level fluctuate versus whenever the Nasdaq closes and folks are arbitraging it, you can generate some kind of transactional volume. But yeah, I'm really curious to see how that plays out.
Yeah, I think even to address that really quickly, there's obviously an incredible opportunity in emerging markets, right? You think of like LATAM, there's probably a whole host of sort of app-based savings accounts that folks are accessing, where now instead of putting money away into something that's denominated in US dollars or actually US dollars in a fancy front end, they could actually very, very like easily and steadily dollar cost average into S&P 500. And now that could be powered by our on-chain stocks. So if you have on-chain stocks, you also have a robust amount of infra that was built during this last bear market. That means that any front end can now essentially be Robinhood, just add Ondo, right? So you could serve up those assets. For a US-based audience, obviously we need more SEC clarity because these assets are only available to non-US. But I'd still see a lot of opportunity for sort of redefining what margin looks like on an asset like this. If you go to your broker right now and you try to take a loan out against your assets, there's no way that you're going to be able to get a loan or a rate unless you have significant holdings like Jeff Bezos's famous, outstanding loan with JP Morgan where he pays 1% against his Amazon shares, right? I don't have access to that. A lot of us don't have access to that, right? And you definitely don't have access to that at micro levels. But now you perhaps could. If you look at on-chain lending rates for ETH, which is a much more volatile asset than the S&P 500, those rates are a few points. So you could imagine that the S&P 500 would be that much less volatile. So giving every person the ability to then, take out against their collateral, I think is the utility that we're looking for.
So I just want to add to this. This isn't planned, but we should partner, and I think we already are because you mentioned in LATAM, as for example, a lot of folks have these dollar apps, but in reality, these are DeFi mullets. They give you a non-custodial wallet and a debit card. That's one-way off-ramp. We just announced launching a crypto neobank, and so that has the on-ramp component, and as folks come in, that's net new capital, and we want them to be able to access products such as tokenized S&P, et cetera, et cetera. So I think that's the new positioning of RWA, as in like, there's so many things tangentially to RWA that people aren't thinking about, and I think part of that is like on-ramps and UI, UX and design and things like that.
Great. And your idea about partnering is it's exactly the reason why we're all here, to network with each other and find ways to partner, and especially on a panel. Great point. I'm going to dig a little bit deeper on Tim's question about, okay, so who's going to trade this stuff, really? Who's going to trade it? Who's going to be creating liquidity in it? And as I mentioned, at Keyrock, we're having all these conversations with crypto native and also TradFi firms who are coming to us who haven't started a project yet, but they want to get information. How do they get started? Whether it's a tokenized money market fund. Some of it could be a single stock equities tokenized or index basket equities. None of them have happened. Again, it's a mix of crypto native and both TradFi. What is it going to take for real institutional adoption for some of these firms that I'm already talking to, get them over the fence, get them off ground zero and get going? What do you think is going to kind of get them off?
Yeah, I think we're seeing some momentum, right? So, a few weeks ago at Consensus, we announced with our partners at Chainlink that we actually had JP Morgan do their first on-chain transaction in a public blockchain. I think that was being referenced on the last panel. And that transaction actually happened on Ondo chain testnet. So it's exciting to see institutions actually start considering, now if I want to settle cash and I'm MasterCard and I'm using my multi-token network, I used to actually have to pay for settlement services, offices. Now I could actually settle them on my own blockchain, and I could actually settle them in yield coins that are producing 4.25% or whatever, close to SOFR is. So I'm actually making money on my settlement, which is ridiculous. So I think that we're seeing that flywheel start. In order for that to continue, though, I think we need this continued sort of regulatory environment where everything is, permissible and not vilified. Yeah. And we also need to see more use cases of, major institutions that are not just on the sell side jumping in and showing how they're saving money and utilizing the benefits of blockchain instead of just dipping their toe in the water and having a press release from it. Yeah.
Totally agree, and we're also super excited about just that fact that we're having these conversations with everybody, and there's that amount of interest that's happening. Do you think regulations and the regulatory environment is really the main reason why that's been stopping them, or is there something else that's going on out there that's just not getting them going?
So we at Mantle avoided the Western markets like the plague until it was clear President Trump was going to be elected. Yeah. For those who don't know, Mantle is de facto Bybit chain. So, now we see there's a pocket and window of opportunity to launch and tackle not just the U.S. market, but also globally, because globally folks will follow whatever the U.S. sets the example for. So us and a bunch of other folks, as I'm sure, are trying to throw a bunch of spaghetti products, new innovations at the wall and see what sticks. Because it feels like there's this window where you try and experiment and you don't know if the next administration will be as friendly.
Completely agree. Great point. Let's talk a little bit about infrastructure. What's kind of underpinning all of this RWA activity, and is it really there yet? Is it ready? Tim, Mantle is an expert of connecting with best of breed of infrastructure to do and exceed in what you're doing. Can you give a little kind of perspective on how infrastructure is right now? Is it still kind of piecemeal and really kind of clunky, and is it moving to be more streamlined?
So I actually think you might be a better person to answer this. But like, so for example, we launched that index fund on our as Mantle, right? But we use Securitize. You guys don't do third party, so we worked with Securitize, and we realized, wait a second, most of the work is TradFi, off-chain, coordinating fund admin, transfer agents. None of this stuff even makes sense to be on chain, right? So to your point, like, is the infrastructure there? It's not that it's not there. It's like the most of the work doesn't belong on chain in the first place.
Armand,
Yeah,
go for it.
no, I think it's interesting because the maybe this is a hot take, but the rubber stamp that is SOC 2 compliance has been getting a lot of action recently, and everybody thinks that just having these simple check marks of let's say off-chain entities is making something institutional grade. So institutional grade and what actually is happening in terms of real infrastructure, a lot of it still does live off-chain. Right, yeah. I mean, everything that we're doing is referencing traditional markets, right? So there's no way that our assets work without that. In fact, I think earlier we were even going to talk about like what's not working. And I think part of what's not working in the RWA space, but is still capturing some of the hype that comes with it, is our assets that don't necessarily have the price discovery or the fungibility of, let's say, a tokenized T-bill or a tokenized stock, right? If you take some esoteric like real estate portfolio somewhere and turn it into an NFT collection, it's very hard for me as the end user to understand, am I just being dumped on, buying the bags of someone else because it's now like fractionalized and it's accessible? Or is this actually worth something and it's appreciating? I also don't know if I am entitled to the same rights that the actual owner of these assets has. And I think that's a big problem. So with RWAs comes this opportunity to actually create the same investor protections that have existed in traditional markets and bring them on chain. So for instance, our assets actually entitle the user to the underlying treasuries, which is incredible. So if we go anywhere outside of our manifest and invest in something that is not a short-term treasury or a small cash buffer, then the fund dissolves and everybody's made whole with what they actually were owed. When we think about even, a lot of centralized exchanges like my old company I used to work for, Coinbase, I would always say, hey guys, we don't even have a way to actually have beneficiaries if something were to happen to me and I wanted to pass my crypto along to my wife or my child. And I mean, when we think about the surge in popularity of spot ETFs, I think part of it is not just capital flows that are in the traditional financial system. Another part of it could be this is a seemingly safer way for some of the investor protections that folks are used to holding these assets, where there's, a very known tax, regimen around them, and a very known way to pass these along with beneficiaries, et cetera, should something happen to the holder.
Yeah, a couple points. The first is, someone told me, well, actually, I don't know if anybody here works at BlackRock, but someone at BlackRock told me they got an inbound asking if they can tokenize IBIT. That tells you all you need to know about what they're comfortable with respect to counterparty risk, and actually touching, like going out there and acquiring Bitcoin themselves, right? They'd much rather go with IBIT. But the second thing is, to your point, I think you're absolutely right. I always say, like, nobody wants your illiquid REIT in the Midwest yielding 9% on chain. Doesn't make sense. And an addendum to that is, like, a lot of these assets that folks are painting a broad swath, like, oh, we can throw this on chain, we can throw this on chain, RWA. Those assets by design are illiquid, opaque. They don't want to be on chain, right? Because that actually creates more downside for whoever put them together in the first place. Right. And then lastly on that point, I'll just add, which is like, when you think about where the risk is, I did a lot of emerging markets investing previously, and when you look at guys saying, oh, we can put all these like credit vehicles and loans from emerging markets on chain, how great would it be, financial accessibility, yada, yada, yada. Those are the dream of like ideologues and people who understand the tech but don't understand that this is a credit game, and if you don't understand how the credit works, you're going to get wrecked every single time.
I couldn't agree more. I was 30 years in FX and emerging markets, and I can't tell you how much I agree with that. Getting pricing, in some of these countries is completely impossible. And again, Armand, I totally agree with the point. With price discovery is key, and if you're going to be trying to provide and create an RWA that doesn't have the ability to have price discovery, it's almost a non-starter, right? So on that point, what do you see out there 2-3 years down the road, untapped market, untapped opportunity that has the ability to have some real price discovery?
Yeah, I mean, where we're heading right now is stocks, right? I think that it's going to be players like Keyrock that would probably be more willing to take on weekend risk for equities trading on chain than it would even happen in the traditional markets, right? So I think that there's a clearer path to 24/7 stock trading if it happens, through on-chain rails, and that makes me very excited.
Tim, you have anything to add to that?
I think the broader question, what's interesting to me is like, it's all a function of what risk you're willing to take as an institution, right? If you're willing to go way out of the curve and you hit it right and you have zero competition and you mint yourself as like the paradigm or multi-coin, then you're clean. But if instead you go down the route of being too early in an asset where you're a pioneer but you get arrows in the back, like you launch the first ETP or ETF and then BlackRock gets your lunch, it's tough. So I think the question is like, where can you be innovative and take the right amount of risk and have a sustainable advantage in the long run?
Thank you. I'm going to end the session with 3 questions about more or less lightning rod type of questions about, and I'll start with each of you. Answer this first question will be, what do you think, or what crypto centric, crypto native idea should TradFi asset managers and institutions be basically embracing now?
Perps.
Okay.
Oh, yeah. I mean, yeah, like traditional markets tried with the perps, right? But I don't know why they haven't taken off, but there's obviously strong retail demand.
Strike and Stripe are essentially perps, right? So, yeah, it's coming, and it's ironic how some of it's being reflected now. And being in crypto, you look at it and you're like, oh, yeah, I know exactly what this is.
Yeah. So, great point. Now, what TradFi, either practice, term, product, should the crypto industry be taken on, embracing immediately, assuming regulatory environment is clear?
For me, I think it comes down to investor protection still, and having very clear tax frameworks. Just making it easier to understand how these assets interplay with the rest of your financial portfolio, so you don't have to feel like they're just something that you have to hide.
Yeah, consumer protection so that you can easily slot your product into their existing distribution frameworks.
Mm-hmm. Great. And last one, if you had a regulator right here in front of you, what would you wish that they knew about your business?
Don't protect people from yield.
What do you mean?
Because a more informed regulator is going to help us, right? So what do you think? What would they want to hear from you? All right.
Yeah, I think just being innovative on thinking about how crypto is global, right? It's borderless. So like having a more compliant framework for how money moves globally. So for example, like we have a neobank, but it's Swiss, so we can't onboard Americans, right? If somehow we made that workable, then that would be great.
Great. Well, that wraps it up, guys. You've been great, and keep on doing the innovating and partner with Keyrock. We're happy to be providing all the liquidity you guys need. All right.